All right, take 3. I think I got it now. We're going to have a conversation here on the difference between a stop, stop limit, stop exit. Okay? Because they mean different things. Okay, let's get a whiteboard going here. And stop exit versus stop limit. Okay? So, a stop exit means that once the exit price has traded, okay, your order then becomes a live market order. Okay? So in the case of iRobot, we put in below the market a stop exit order for $1.25. We did that when the stock was trading a little bit higher and our spread was trading higher as well, like around $1.40, $1.45. We did that, like we use stop exits to just protect ourselves in case the stock and then our spread starts moving against us. Okay? So when the stock was, or when the spread was trading in iRobot, our spread was trading $1.40 and we entered a stop exit at $1.25. Okay? So, it's not going to become a live order until that spread starts trading at that price of $1.25. So if it's trading $1.40, it's trading $1.50, trading $1.60, that order is just sitting out there in the background. It's not a live order. It automatically becomes a live market order once the spread price trades $1.25. Not only does it become a live order, but if you use a stop exit or a stop market, which here is what it looks like on TOS. Whoop. If you hit the order drop down button, you can see all the different things here. All the different types of orders you can put in. Now TOS doesn't say stop market, they only say stop or stop limit. Stop is the same as stop market. Okay? Everybody got that so far? Okay, Rick, you with us so far? Because you're the one that asked about this, so I want to make sure you're with me. Rick, I'm showing you right here what the choices are on TOS. You can see the stop or the order possibilities. Market, limit, stop, stop limit, and then trailing. So Al, yes, you can do that. That's a different discussion that we can get into. Okay, so Rick, you should see stop in addition to your stop limit choice. Okay, look down on your order bar here. Okay. Hello, Punitha. Good morning. Look in the order bar, and if you click the drop down, you get those choices. Okay, everybody see that? Okay. Okay, if yours, Frank, is showing only market and limit, I don't know, that's something you got to ask their help desk. Okay? If Rick, you too, if you only have that, then you got to call their help desk. But that is what you should see. You only need stop and stop limit, Rick. Those are the only two things you need for a stop order, or stop and stop limit. That's all I have here, or stop and stop limit. Well, you guys should be able to scroll down on your screen. Okay, or if you click on your Thinkorswim platform, you should get all of these choices. Okay, so does cool, Pamela. Does everyone understand now what stop means? Stop is the same as stop market. Okay, becomes a live market order. However, if you choose stop limit, okay, that is different. That is different. What you are now saying is that once the exit price has traded, so same thing at the beginning. You put a stop limit order out there. Your order is just resting out there. It's just sitting out there. Okay? It's out there in la la land until that price hits. But once that price hits, rather than becoming a live market order, it now becomes an order at the limit price that you put in. So the risk to that is, and there's pluses and minuses. The risk to that is, if the stock, in this instance, iRobot, if the stock just really started continuing to go down further and further and further, and the spread started getting lower and lower and lower, well, your offer is then sitting out there at $1.25. If you use a stop rather than a stop limit, you are going to get filled at the next print price, theoretically. So traded $1.25, which triggered our stop exits. Some people got filled 124 because that was the next price. Some people I saw got filled 128 and 130. Some may have gotten filled at 121. It just triggers it and makes it a market order. So that is the difference between the two orders. Now, why do I choose stop rather than stop limit? Because my theory is, and it doesn't mean it is the right theory, this is just my personal opinion. Okay, my personal opinion that if I want to get out of a trade, right, if I'm using the stop in there as protection, I'm using it for a reason. And so if I want to get out of a trade, I want to get out of it. Whether I lose an extra penny or two, or make an extra penny or two, or whatever it is, there's a reason I want to be out of that trade. And so I am exiting. That is the reason I prefer to use stop instead of stop limit. Makes sense? Again, you guys, this is something that, like all the other strategies we talk about, something that you guys will get a feel for. Something that
good morning,
you guys,
chameleon.com.
that you guys may want to just play around with on your own. For my 2 cents, again, if I want to get out, I want to get out. I just want to be out. Make sense? No, Punitha, no. Nobody got out at 250 yesterday. Cool. All right. Let me wrap the recording up. I'll get it out there, post it up for everybody, and then it'll be in the docs folder. No, Punitha, the broken wing fly, no, you should not get out. Todd, I don't know what to tell you because I know that at that point it had not traded $1.25 yet because it was still 130 bid. But again, when you're using stops rather than stop limits, you are, as Jerry said before, you're a little bit in, I don't want to say the twilight zone, you're a little bit in that gray area. However, again, if I want to be out, I want to be out. Okay? All right, hopefully that helped everybody. Let me get that up here, and I will be right back.